I am a real estate attorney from Zimbabwe. My bio is not that long, guys. So, so my journey with REITs started in 2017 as part of a team that was mandated to research on the topic and lobby for the introduction of REIT legislation in Zimbabwe. This was during my time as a senior associate within a law firm called DLA Piper Zimbabwe. Post that period, I then became group legal manager for Terrace Africa, which is a regional property development company with presence in Zimbabwe, South Africa, Zambia, and Mozambique. I also have a third hat. I am the secretary of the Zimbabwe REIT Association. That is all. It is such a pleasure to stand before you here today in recognition of a common purpose, the development and growth of the REIT industry in Africa. Through my presentation, I hope to walk you through the Tigere Property Fund's journey, which is the first listed REIT in Zimbabwe, proudly associated. Its success has reshaped the Zimbabwean real estate and capital markets, and it has built confidence in a market that has been desperately searching for a lucrative income yield. May I have the first slide?
You have to ask in like multiple languages.
First
it's a test.
slide, please. In Shona, do you know kumbira slide here? Good time.
Yes, 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 Christabel. Do you want to describe it to us? Arial font, size 12. It's green. It's very exciting. Oh, Christabel. Oh.
As with any story or leading role in a movie, the main character always has a backstory leading up to the present day understanding of how things came to be. So allow me to take you back a bit. The story is a mere 7 years old, so don't worry, I won't put you to sleep with this. Next. Next slide, please.
Just start speaking Shona, yeah. Oi, oi, oi.
Is it working now?
Yay, yay!
In 2017, I had the great privilege of taking part in lobbying efforts and stakeholder consultations in collaboration with the Ministry of Finance and Economic Development. The consultative process was largely aimed at stakeholder education on the benefits of introducing REITs in Zimbabwe. At that time, as I mentioned, I was with DLA Piper Africa, Zimbabwe, and I recall that Anne, if she's in the room, sorry for butchering your surname, Anne Kinyanjui and her team at IKM Advocates in Nairobi were gracious enough to allow me to understudy what was the then existing Kenyan REIT framework. So Team Kenya, we thank you. In 2019, the Ministry of Finance consented to and published an amendment to the existing collective investment schemes regulations. Through Statutory Instrument 240 of 2019, the legislation paved way for the recognition and registration of various investment schemes, including REITs, with the Securities and Exchange Commission of Zimbabwe. Following further consultations, amendments were made to the Finance Act, the Securities and Exchange Act, and the Income Tax Act. Summarily, the sum total of these interventions is that REITs in Zimbabwe are exempted from corporate income tax, subject to meeting certain mandatory requirements. For example, income into REITs has to accrue from new real estate projects which commenced after the 1st of January 2021. This applies to all REITs with the exemption of pension funds. At least 80% of taxable income must be distributed as shareholder dividends annually, 80% of gross income must be received from real estate. And lastly, the REIT must be listed on an exchange registered under the Securities and Exchange Act. Following extensive regulatory consultations and a rigorous vetting process, the Tigere Real Estate Investment Trust, otherwise trading as the Tigere Property Fund, was registered on the 11th of August 2022 and subsequently listed on the Zimbabwe Stock Exchange on the 30th of November 2022. Similar to the Kenyan framework, REITs in Zimbabwe can only be registered as trusts. What happened to my photo, guys? As of the listing date, Tigere owned 2 flagship properties, namely Phase 1 of the Highland Park Mall, which was completed in June 2022 with a GLA of 6,448 square meters and anchored by tenants such as Pick n Pay, Puma Energy, and Simbisa brands. Upon entry into the market, occupancy was at 98% and has since become 100%. That's meant to be a full screen representation of the Highland Park Mall as at the opening date.
It has jet lag. Your slides all have jet lag, I'm so sorry.
The second property is Chinamano Corner, which was completed in July of 2022 with a GLA of 1,987 square meters and anchored by Puma Energy and Simbisa brands. The property was also sitting at 100% occupancy as at the date of listing. Additions to the Tigere portfolio also include the recent acquisition of Phase 2 of the Highland Park Mall through a unit placement. Phase 2 was completed in December of 2023 with an additional GLA of 3,050 square meters. Also fully lit as at the date of transfer. So that is the Highland Park Mall encompassing Phase 1 and Phase 2. The REIT has also secured first rights to purchase upcoming developments, including the Greenfields Retail Center at the Harare Showgrounds, which has an opening date of 12 December 2024. The Greenfields Center is interesting in that it is underpinned by a 50-year notarial lease between the REIT and the Zimbabwe Agricultural Society. Not the most common of tenure choices in Zimbabwe, which is dominated by obviously the first choice leasehold. The development has a GLA of 10,000 square meters. That was meant to also be a full screen render of Greenfields. Okay, that's better. This is just so you can visualize. This is Greenfields a few weeks ago under construction. Also lined up is the Kadoma Retail Center and the aspirational Highland Park Precinct and Design Quarter. The precinct concept was modeled along the lines of Oxford Parks and Melrose Arch in South Africa. The design is meant to upgrade infrastructure in Harare, which has been lagging behind, and to provide A-grade office spaces in a community-type environment with internationally scalable amenities and supporting services. What have you done with my slides? Hey. This is the design quarter. The design quarter will be located within the Highland Park precinct and will be connected to Highland Park Mall by a pedestrian bridge over one of the busiest arterial roads in Zimbabwe, the ED Mnangagwa corridor. With an expected date of November 2025, the Design, Home Improvement and Lifestyle Center is already 80% pre-let. The fund does not, however, operate in a vacuum, and our overview of the macroeconomic environment as published in our Tigere half-year report is testament to the current operating environment in Zimbabwe. As most of us know, Zimbabwe is infamous for its monetary policy changes that can drastically affect the economy overnight. In that regard, economic activity tends to slow down, particularly in periods leading up to monetary policy statements. The introduction of the local Zimbabwe gold currency, the ZiG, curtailed liquidity and drastically reduced money supply. Effects on the fund were slower uptake of units and reduced turnover collections from anchor retailers such as Pick n Pay, which are mandated to sell their wares in both the USD and ZiG currency. Despite these challenges, Tigere has prevailed, as currently 95% of collections, rental collections, are in United States dollars, with a mere 5% in the local currency. This has allowed the REIT to channel the 5% towards operations and to pay dividend payouts in 100% hard currency, a firm favorite with our investors. In spite of the challenges, Tigere remains focused on providing quality assets with a strong tenant base, transparency to investors through reporting structures, providing quarterly United States dollar rental yields and dividends, as opposed to the volatile local currency, which as of today is at the official rate at a 1:29. The major thrust of the trust is to also invest in new properties so as to keep capex and maintenance costs at a minimum. And obviously, as demonstrated, diversification of the property portfolio by way of geographical location across the country. True to its growth and diversification strategy, net asset value for the fund stood at 22 million in 2022, and with the addition of Highland Park Phase 2 in September, now currently sits at 33,841,758 United States dollars. This is with a forecasted target of 60 million by 2026. In the interests of time, I will skim through some of the lessons derived along the Tigere journey. Experiences pre-listing. Oh, there we go. There's a slide that looks normal. Regulatory issues and compliance issues still need to be refined to provide a better listing experience for future REITs. The inherent risk of local currency depreciation makes IPO pricing very difficult, as the IPO period on the ZSC has to be open for at least 60 days, during which the local currency is likely to plummet. This is one of the major disadvantages of listing on the Zimbabwe Stock Exchange. The interplay between the ZiG and the USD continues to affect portfolio performance. However, as previously stated, 95% of rental collections remain in USD, curtailing that risk. Demand for Tigere shares is consistently driven by USD dividend payouts, which have been made on a quarterly basis since inception, and the idea is to remain as transparent as possible and to report in USD terms that are easy to follow, not only in Zimbabwe, but across the region. To date, the fund has paid 7 quarterly dividends, and the mandatory threshold of 80% has increased the need for heightened cost management and operational efficiencies. From a financial perspective, it is imperative to achieve growth through yield-accretive rights issues or allocation of shares and asset swaps, as was the case with the acquisition of Highland Park Phase 2. This is how the fund has managed to keep borrowing at a minimal. The fund's impact on the market over the past 2 years has been tremendous, as the fund has managed to create a previously non-existent yield-accretive store of value with 95% uptake at the pre-listing fundraising stage. Even I was surprised. Zimbabweans are infamous for their propensity to spend. We do not have an investment culture. This is within the further context of a market that has little to no confidence in the formal financial services, with close to 65% of the country's GDP residing in the informal sector. It's all under our pillows. With the recent exodus of corporates from the Harare CBD, the fund has strategically targeted development in desirable asset locations in the northern suburbs of Zimbabwe, along the ED Mnangagwa business corridor, and along major arterial roads on the outskirts of the CBD. The fund has and continues to aid in the increase of quality retail supply and improved infrastructural development, such as roads, drainage, and sewer systems that have long been overdue for an upgrade by the city of Harare. The fund, through its CSR and ESG initiatives, also allocates a portion of its net earnings to the Tigere Educational Fund, which has the mandate to support disadvantaged and underprivileged future practitioners within the built environment areas of study. The late Oliver Mtukudzi had a song about always copying the right doily pattern if you felt the need to. I won't sing, I promise. As we did in understudying the Kenyan REIT framework, Tigere has created the local blueprint for REITs in Zimbabwe and is a catalyst for the listing of new REITs and the formation of the Zimbabwe REITs Association in June of 2023. Its current mandate, that is the Zim REIT Association, has been the lobbying for consolidation of REIT legislation and tax reprieve similar to Kenya, such as stamp duties, capital gains, and VAT. VAT is, however, refundable, but obviously, due to the size of the properties in question, this is a huge hindrance to cash flows. Following the listing of Tigere, we have since witnessed the listing of the Revitas Property Opportunities Fund, which is run by the National Railways of Zimbabwe Pension Fund. Revitas was listed in 2023 within a year of Tigere, and now, almost another year later, we are expecting 2 more REITs to list by the close of the year. These are the Zimri Holdings, Eagle REIT, and Simbisa Holdings, Puma REIT. Prior to their imminent listing, we are already witnessing significant changes on the ground to the residential and hospitality spaces in Mazoe, Harare, and the Victoria Falls. I understand, according to statistics from the Securities and Exchange Commission, that 3 more REITs are due to be listed in 2025. For the time being, Tigere has been intentional about leveraging its relationship with Mauritian-based Frontier Real Estate Development Company as a private financing option, and also partnering with local developers and pension funds in return for Tigere units. Long term, this is not sustainable owing to the risk of dilution. However, this strategy has so far allowed it to grow without bearing the brunt of exorbitant interest rates, which currently sit at 20% per annum. The fund is therefore open to potential long-term debt funding structures with a guaranteed return of between 5 to 6%. As a ZSE listed entity, unit acquisition is in ZIG with a USD return. Who doesn't want that? As of today, the Tigere unit is trading at 136 ZIG, translating to 21 cents at official rates. The parallel market rate, however, is at 40. So imagine what you could do. I'm not advocating for anything illegal. I look forward to presenting again soon with a much fuller looking slide on Zimbabwean REIT players, including partners from beyond Zim borders. The best time to invest in Zimbabwean real estate was 5 years ago, guys.
Right.
The next best time, I believe, is now.